Okay, so the last variable we're going to go over to figure out who's offsides and again determining control is we're going to be looking at the futures basis. So before we get into that, let's just do a little recap. So we know what funding is now. We can look at the premium or discount and those extremes to help us determine who's offsides or who's in control. We look at open interest and price. We have a pretty good understanding of that. And we looked at cumulative delta briefly. And now we're going to be adding in futures basis. And if you recall in the financial instruments section, we talked a bit about futures and what they are. So we know that there's a spot market or a cash market, and we know there's a futures market. And this is a form of derivative that's going to allow us to speculate or hedge on the future price of that asset. So the difference between the spot price and the futures contract price is going to be the futures basis, right? So really simple. We look at our spot price and we look at our futures price. Now there's two instances where if the futures price is way below the spot price or way above the spot price, it can help us to possibly see inflection points. And the two instances are called contango and backwardation. And contango is when the forward price of the futures contract is higher than the spot price. So really simple, if the spot price is $1,000 and the futures price is $1,500, well, the futures price is greater than the spot price, illustrating contango. Now, backwardation is when the forward price of the futures contract is lower than the spot price. So just like we looked at the example we just talked about, let's say that the spot price was $1,000. Well, the futures contract would need to be below it. Maybe it's $700. This is going to be illustrating backwardation. Now, understanding these two concepts is important, but how we look at it on the curve and how we're going to look at it in relation to price is where really it's going to start to make sense. So let's just look at what we were talking about. Well, we have our futures price contango. We have our spot price right here. We can see that the futures price is above this. So 11,000 is greater than 10,000. Now futures price backwardation, spot 10,000, 9,000, right? And this is our equilibrium point right here where everything's in line. But we look for these differences, and the more extreme they are, sometimes can help us to determine maybe the buyers are a bit too aggressive or maybe the sellers are a bit too aggressive. So let's take a look at that on a chart, and I want to show you how we can spot this. Well, let's look at our little storyboard, right? We have a nice uptrend here. We're making higher lows and higher highs, and price is trending up, and we can see down here we have an indicator. And if we look at this axis here, we can see a 0, negative numbers, and positive numbers. Now what this is it's the futures basis, right? So this is our spot price, and this is the futures in relation to the spot. So our spot price, right, this is Coinbase BTC USD, is going up in a bullish market structure, and price is appreciating. Now we can see that the futures basis is going up as well. But it gets to the point up here where it's really high, and we can see that the futures contract is over $600 at a premium to our spot price. And that's where that contango comes in. And the larger the premium, or in this case the futures basis, at times this can be very telling for maybe we're getting to an exhaustion point in the trend. Now in an uptrend, we're kind of coming into resistance. Now we're making our lower highs, and we can see that the premium is still up here. And it was somewhat of a tell because we can see that price is going down, and now we see the premium dissipating and the basis dropping. Now I want to pay attention to here. So we see a very large impulse down, and look at this. I mean, we see the futures basis at a huge discount. And what do we call that? Well, we know that's backwardation. So at this point, the futures contract is trading way below the spot price. And we can see here almost at negative $800. So just like funding, when there was these extremes where whether it's negative funding rates or positive funding rates, you should think of kind of contango and backwardation as the same thing when looking at it in relation to price. And we can see that we had a snap back in the futures basis, making the backwardation go away, come back more in line, and we can see that we're actually starting an uptrend. So that backwardation was a nice signal. So another piece to the puzzle that we want to incorporate into our analysis when we're looking at sentiment, right? These are big parts of liquidity theory. And now we have 4 variables that we can watch. And I want you to start to think about, well, if I know what the futures basis is, I know what funding is, I know what open interest and price are doing, and the cumulative delta is showing some signs of maybe an exhaustion by the buyers and sellers. Well, that's 4 points of confluence that you have to allow you to be more confident in your trade setups. And again, this is more of a primer into what we're going to be diving into with high block capital and understanding more about liquidity theory and implementing this into our technical analysis and our charts and using sentiment analysis to give us that extra edge.